faster and faster beyond turbulence. Welcome to another segment of the earnings review, and today I'm with the Group CEO of RTG, Atendai Mazivanyika. Welcome to the program.
Thank you very much, Ron. Great to be with you.
Good.
Great.
Maybe to begin with, you stated of a perfect storm in 2012, and there was restructuring, there was the COVID era, and now we are post-COVID. Maybe your comment on the journey that RTG has gone through.
Well, it's been an exhilarating journey, Ron. It's been a journey where we had to handle so many difficult situations. We inherited an organization that was highly leveraged. You know, we had a gearing of in excess of 70%. And most of that debt was at a very high cost. We were experiencing cost of capital of around 24%. I mean, what business can survive something like that? We had very disengaged employees, and you can understand why. Simply because these are employees that were probably being paid late, if at all. Things were very difficult, I can say. We were also invested in areas that, you know, on a review, we realized that probably the presence in those areas was not really advantageous to our shareholders. So we had to look at the whole structure and say, where is it that we want to be? And where we needed to come out, how do we do it? Because it was not just properties in Zimbabwe, it was also outside. We were in Zambia, we were in Mozambique, we were all over. And, you know, I'll give you an example. By 2015, we were able to come out of our Mozambique Beira investment. And the very next year, or 2 years later, there was that cyclone. And that cyclone actually flooded up to the M2 level of that same property. So we were, it was a fortuitous move, but it was the right move business-wise as well. So we had to make a lot of very difficult decisions. I mean, at that start, we had about 1,260 employees. We had to literally halve those. And some by retrenchment, but some, you know, in terms of disciplinary, because like I say, the engagement levels were not where we needed them to be. So it was very important for us to do a full diagnostic of the business. And, you know, we had to work with shareholders who were not always in agreement. We had to work with the shareholders to restructure the organization, to get some form of facilitation. And, you know, over the years, by 2017, we were able to pay off, you know, the debt. And part of that debt, for example, was for this very property, you know, and unfortunately, you know, some of the money, you know, hadn't really achieved much for us, but we had to pay it, about $7 million of debt, you know, with the Afrexim Bank. We managed to pay it. We paid off debt with the shareholders. And by 2017, we had achieved pretty much a total turnaround. And the interesting part now is in 2019, we made a decision in about March to say we needed to refurbish this particular property. When we made that decision, that was around March, the initial indications were that it would take about 8 months to refurbish. But we sat in a meeting and we said, you know what, guys, we don't have 8 months. And we agreed that the whole refurb needed to be done in 2 months. So from 8 months to 2 months. So by end of the year, we had bought all that we needed to buy. And come 28 December 2019, we started the works. And our own employees helped in terms of, you know, taking out all the old stuff. We stripped this place. I can tell you, I know that this place was built using those big blocks. It was not bricks. Okay. We stripped it, took off the paint, took off the plaster, took off the plumbing, took off the electricals, and we literally rebuilt this hotel. So I can tell you that customers that are coming to this hotel are honestly coming to a rebuilt hotel. It's not just a refurbished hotel. And so we started 28 December 2019. And by the 14th of March 2020, we announced to the market that we were through. So we refurbished this place in 2.5 months. And guess what? A week later, His Excellency the President announced the onset of of the COVID-19 restrictions, effective 1 April 2020. So 2 weeks before, we had completely finished our refurb. So when you're doing the right things, you tend to be very lucky. When you're doing the right things, you tend to become lucky in business, I believe. And so when COVID hit, we had a brand new hotel. And by end of June, we were looking after our returning residents. We're the only hotel to be doing that. We looked after almost 2,000 returning residents with COVID-19. Well, not with, but who were coming back and had to be quarantined for COVID-19. And so that was very, fundamental to us. And I can tell you that throughout the COVID era, from 2020 right through to 2022, we did not retrench any of our employees. We made a conscious decision to say we will keep all our employees. The Victoria Falls area, for example, from about April 2020 to call it about end of 2021, we literally shut those hotels, but we kept our employees. We kept on, giving them some basic sustenance. We looked after their medicals. We looked after, their welfare. And at the earliest opportunity, we then redeployed them to other units in the group. So what I'm trying to say here is that, we went through so many challenges. So when you hear faster and faster beyond turbulence, it's because we experienced turbulence right from our genesis in 2012. Whether be it restructuring, getting our staff to be right orientated, making sure we got out of the wrong investments, coming through to making sure we paid off debt, coming into the COVID-19 era, and making sure we made the right decisions as far as our people were concerned. We went through so much. But what I'm excited about is that it gave us, an introduction into facing challenges unabated, challenges, with gusto and determination and clarity of purpose. And today we are sitting with a debt-free balance sheet, and we're now talking of growth.
Wow, what a journey that you have gone through.
Thank
you. The report also said you're expecting a total rebound to pre-COVID levels. And you said in your 5 months to the current period, you have sort of the RevPAR has gone up by 12.5%. And maybe going back to 2018, the total the receipts as reported by the Zimbabwe Tourism Authority were about 1.4 billion United States dollars. In 2022 last year, they were around 911 million dollars. So the question is, what sort of matrices are you looking at to determine if we are rebounding to those levels beyond COVID-19?
Well, as a business, we keep track, of course, of arrivals into the business, and whether those arrivals are from domestic sources, regional, in terms of your Southern Africa region, or international. So we keep track of actual people coming in from those sources. We also keep track, of course, of the absolute dollars to say how much are we generating from those. And all our numbers are actually showing that we are now, at pre-COVID levels, be it in terms of arrivals into our units, be it in terms of, the dollar, revenues that we are now collecting. It's exciting. Of course, there are few markets that have not yet fully recovered, but there are markets that are almost fully recovered and others that are new, that are now emerging post-COVID. But net, I can tell you with confidence that we are seeing a very bright immediate future going into the rest of 2023 and into 2024.
Well, that's very good news for the sector. And also your occupancy level has gone up 46%. In 2021, it was around 31%.
Yeah.
What strategies, maybe going back to 2022, did you employ to sort of make sure that you had this in your order book?
I think, it's the deployment of various approaches. However, I think faster and faster beyond turbulence is not just a catchphrase.
Yes.
It's a true belief that we have that we will not allow anything to stand in our way. As long as we've looked at the terrain and we're clear about the direction, we go for it. And so we quickly re-engaged. I'll give you an example. The fact that in May of 2020, we sat as a team when we realized that there was not going to be any other business apart from COVID business or COVID risky business. We made a decision to say, you know what, let's be a quarantine center. And we're literally the only hotel to do that. That is the approach we take. When we are clear about the opportunity and we're clear of the risks and how to mitigate against them, we move. And so we quickly re-engage the global markets. And I remember, we had to go all over the world and go PCR testing and whatnot, and re-engage with our global markets. We've also got representatives all over the world. We've got representatives in the US, we've got representatives in Europe, in China. And so we got them re-engaged quickly to go back to market. We ourselves do go around as well. Like I've said, our commercial director right now, he's actually in Australia. We've just come back recently from the UK, South Africa, Germany, the US. So we're engaging those international markets already with confidence. And domestically, like I said, we are now saying, listen, we need to ensure that we market ourselves aggressively to our local audience as well.
So you are saying you're engaging other countries.
Yeah.
You also have representatives in these countries. I'm saying, how does maybe what is RTG Group, what it is doing right now in Zimbabwe, how do you then compare with other markets, maybe in South Africa, in America, and so forth?
In fact, we used to sort of see it from, observation, research, that for a country to become strong in terms of travel and tourism, they need a strong domestic market. We used to sort of see it from a theoretical point of view whenever we traveled. But now we're actually experienced it during COVID. To say those countries that had invested in their domestic market and driving tourism in their domestic market did very well. Look at countries such as, look at Dubai.
Yeah.
Dubai, continued to do extremely well. Look at America. Do you know that the occupancies in America at the deepest point of COVID were about 52%? So it's all because people in those countries understood the importance of their own people. Our problem in Zimbabwe is that we always see value in the foreign. We always see value in the external. And we fail to see the gem that we have in ourselves. And we want to be the ones to recognize that and to say, you know what, let's drive value among ourselves as well. In as much as we're bringing external money, but even among ourselves, let's, do business together.
Wow, that's insightful. And a revenue from Heritage Expeditions Africa and Gateway Stream contributed 10% to your total revenue.
Yeah.
How are you leveraging these business arms to sort of diversify your revenue streams?
You see, if you look at the traditional hotel business, I'll tell you a statistic that will surprise you. Because we're a long-haul destination, if you look at the whole value chain, right from a person that is based in Toronto, they now make a decision that they want to travel to Zimbabwe. If you look at their spend, right from the airfare, long-haul airfare into maybe South Africa, they experience a bit of, experiences within South Africa. Then they come into Zimbabwe, maybe into the falls and so forth, and then back home. If you look at the total spend, what they spend in Zimbabwe in the 2 to 3 nights is something like 5%.
Ooh. Wow.
So in other words, one of the aims is to be more involved in the tourism value chain,
Okay.
especially in the upstream. And the Heritage Expedition is about that. Facilitating some of the travel, okay, especially domestic travel. Someone wants to travel to Nyanga. We need to be able to provide that. they've arrived at the airport at the Victoria Falls. We want to be involved in that. They want to experience, go through some experiences, activities. Let's facilitate that, either on our own or in partnership with people that are good at doing that particular activity. So Heritage Expeditions comes and fills that space. Gateway Stream, on the other hand, is really to facilitate various experiences. Whether you're sitting at your office and you say, you know what, I want to eat something nice. Do I want a takeaway? Maybe not now. I don't need a takeaway right now. What do I do? Okay, but I don't have time to run to a hotel. But you know what? Through Gateway Stream, you can go on the app and place your order. Very, very affordable food. It's not your $20 a meal. It's probably your $5, $6 a meal.
Yes.
You see? Quite comparable to what you would pay at a fast food, but it's hotel food.
Wow, that's interesting as well. So the report as well stated that you plan to expand your hotel portfolio and also to expand and focus on technology digitalization. Now, what locations are you targeting maybe for the potential new hotels?
Well, new hotels, there are a lot of opportunities emerging around the country. But if we could get opportunities, say, in the Eastern Highlands, we see the Eastern Highlands as the emerging alternative to the Victoria Falls. If you think of tourism in Zimbabwe, premium tourism, a lot of people just will run to Victoria Falls.
Yes.
But Victoria Falls, after you've gone once, twice, you probably want something else as well. And so we think that the Eastern Highlands is a good candidate. We think that if you look at the sort of your Matopos and your Lowveld, they're also very good candidates. Kariba would feature quite well as well. The only problem, of course, being access. I think there's an airline that's now sort of doing something there. But we also know that development of tourism, you get to that sort of chicken and egg question again. What goes in first? Do you start by facilitating transport, air travel, or do you start by putting up facilities that are viable? So we would like to lead that whole process. Where we find a good facility, we will go in there and then use Hexa in the meantime to help our customers access those places. So we are quite open to the type of opportunities and the placement of those opportunities. And we want to be involved in facilitating our customers to make sure that they access them.
And as well, your net profit in 2022 surged by almost 1,200%. How do you think is that sustainable levels of profit growth in 2023 as well?
Look, like I said to you, part of our learnings during the turnaround period was how to achieve more with less. How is it that you can really come to strip costs and therefore be able to achieve a lot without it costing you an arm and a leg? And that came through also during COVID. Because remember, during COVID, it was the similar type of challenge to say very little business, but costs were probably going to remain high if you were not careful. So we employed our learnings of your 2012, 2013, 2014 into the COVID era. So where we stripped quickly costs again. So those costs, we kept them in check even after 2020, 2021. So as we hit 2022, we had a very lean structure, which we are maintaining. We are continuing to ensure that those costs don't creep back too quickly. So we now have a very efficient business model, and that drives your profitability. And we think it's sustainable.
Good. So cost management was key for you to sort of attain those high levels of profit.
100%.
Okay. And also maybe the report mentioned the discipline in profit growth.
Yeah.
But we also wanted maybe to hear your thoughts on in terms of your gearing ratio stands at 1%. We had investments maybe outside Zimbabwe. Maybe you can also maybe touch on that as well.
Yeah. The gearing at 1% means there's no debt really. The question is that a good thing? If you're a shareholder, you're probably saying, no, it's not a good thing. because you expect your money to work for you. So obviously the math being, you want an investment that addresses risk, but at the same time, its cost of that debt must be lower than the prospective returns, right? And again, you want to manage your gearing so you don't get back to where we are coming from, your 70% gearing and so on. So we think that we've got a lot of headroom, to be able to leverage our balance sheet. And we think we can achieve that by getting properties in Zim as well as beyond Zim. There are opportunities that we're starting to look at, beyond the shores. And we think that some of those would be very, very good. But it's a bit too early to comment on them because otherwise, there's not enough data at the moment. But we're convinced that we will be able to go in. If you look at about 10 years ago, there was a frenzy for expansion. Mm-hmm. A lot of hotel companies were going all over West Africa, East Africa, they were, Southern Africa. But it's got to be done in a very, very deliberate way. And one of the questions you want to ask yourself is, why is that opportunity available? And is there no one in that country that could take care of that opportunity better than I? Why me? So those are some of the questions that we ask so that we are a lot more diligent, a lot more measured in our quest for expansion.
Tendai, thank you very much for your time. We had really an insightful chat with you, and we look forward maybe to speaking to you soon.
Thank you so much.
Thank you.
It's been a pleasure indeed. Thanks,
Good.
Ron.
Thank you for buckling up, Fox. And indeed, RTG Group is traveling and faster beyond turbulence. They have diversified their revenue streams, and we look forward to hearing more in terms of the Gateway stream and also their other investments outside the country. That's it for the Equity Axis team. Ciao.